The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, no, you're not an actor. His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, I'm Rocky. No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful Money Masters and treasure hunters out there. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me. Folks, I treasure your presence here today, and my outcome is to help you to become a better money master. But mostly, folks, to provide you with the tools that will help you to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of those tools. This, folks, is the tool that I called Preparing for All Possibilities. You know, a strong individual is not a rigid individual. It's almost the opposite of what most folks think. Think about it. A strong individual is not a rigid individual. It's really just the opposite that's true. Strength, folks, think about it. Strength really comes from flexibility. I don't know if any of you have been watching the Olympics out there, but take a look at if you had prepared for 4, for 6, for 8, for 10, for 12 years, whatever it might be, folks. Think if you had prepared that long and, you know, you've got some changing conditions, you need to be flexible. Certainly in some of those sports out there, like gymnastics, you better be flexible out there. And yet that's where real strength comes from. Well, it's no different in your mind. It's no different in the real world out there. And, you know, just simply be flexible moment by moment. Now, look, I'm not saying that it's not important to be firm when you know you're right. That's when you know something is right, folks, and it's okay to be firm, and it's okay to, you know, to maintain that right position, even if the crowd is going against you. You ever have that issue that you ever have to contend with here in the marketplace? Well, you absolutely do. Why? Because this is a crowd mentality. You've got the crowd going one way, and then many times your best trades are when you're taking a look at going against the crowd because you know something is right. We're going to be taking a look at those things here in the market, but what I want you to remember, folks, is remember this. Nobody, and I mean nobody, is infallible, and nobody is invincible, folks. Flexibility, that is the key. One more example. You know, we live here in Florida. I live here in Florida, and I don't know if any of you have ever been through a hurricane. But, you know, metaphors are always great. So any of you that have been through a hurricane, you know, what is it that's left standing, no matter how tall or small? Is it the things that are rigid, like a telephone pole? Is it things that are rigid, like a tree that just simply doesn't move? Absolutely not. It is those things that have the flexibility to be able to move with the wind out there. And we talk about winds. You know, you certainly have winds in the marketplace. So it is really those flexible objects that can blow with the wind, side to side, front to back, folks. And it's always wise to see more than one solution out there. In fact, when you're solving a problem, don't look for one solution. Do not look for two. One solution, what's that? An ultimatum. Two solutions, what's that? That's a dilemma. It's A or B. You want to be able to have more options out there. The more options, the better. When you have options, what do you have? Flexibility. Isn't that what I'm saying? Strength is really flexibility. So always anticipate when we can, and when we can't anticipate, be prepared for all possibilities, folks. So let's go take a look at the possibilities in the marketplace today. Right now, you've got the Dow futures up about 36 points. You've got the ES mini trade up about 5 3/4 points. You've got the NASDAQ futures up 16. You've got the Russell 2000. The Russell 2000 leading the charge up in the futures market, up almost 7 points right now, trading out at 798.50. King dollar pulling back about 16 ticks. Gold pretty much flat, trading up $1.40. Silver up 26 cents, trading out at 28.13. Light sweet crude up 62 cents. Over in around the world here in Europe right now, you've got the DAX up 30 points. The FTSE is up 5. The Nikkei last night was up 77 points. That was 0.8%. The Shanghai up 3 points. No big shake there. The Hang Seng was up almost 0.4%, up 74 points. Our call-in number 877-927-6648. And folks, there were failures across the board yesterday. Failures across the board. Textbook. If I was going to write a book, and I am going to write a book, the day that I would put down there is, what was yesterday, August 6th? August 6th, folks. August 6th is the only day right now you need to go to and take a look at charts. And remember, you can learn as much by failure as you can. Well, you learn more by failure, in my opinion, than you can by success. And that's really what the markets are doing. You know, I don't know. I also grew up in the North as a kid, played a bunch of hockey. And I don't know if any of you have ever experienced walking out on the ice. You know, you're waiting to be able to play outdoors, you know, on a nice sunny day, and you find a lake, a creek, whatever it might be, to go play a game of hockey. And it's early in the year when you think that the ice and the water out there, the water might be frozen, the lake, the pond, whatever might be frozen out there. You know, and I remember as a kid, we used to have a hockey rink in our backyard. You know, so we have to make that. And I remember, you know, you'd put the sheets of water, and you'd want to get out there and play. And what would happen is, folks, you would, especially if you're on a lake or a pond, you know, you'd walk out there and you would start walking out. You'd be kind of safe, and all of a sudden you might hear that first crack, right? Now, if you walked out safely, you would hear that first crack, wouldn't you? Well, yesterday in the markets, folks, there were all kinds of cracks out there. That doesn't mean, boom, you fall right through, right to the bottom, but there were cracks out there. We're going to take a look at those cracks. So yesterday reminded me certainly about playing hockey. Now, one of the things I've got here up on my screen is the Euro-US dollar. It is really all about understanding what's going on in the currency marketplace, because this is the wild card. This is where you need to be flexible. So we're going to start here. If you're watching us on Tiger TV, that's wonderful. If not, and you want to see the chart here, just simply go to the homepage of TFNN.com. You can get the archive of this show on Channel 9. And obviously, you can always listen to us on your mobile device just by going to TFNN.mobi. We're taking a look here at the euro. Now, on the euro, what I have drawn in is I've got the 0.618 retracement. That happens to be at 1.2431. Now, that, folks, is the easiest 0.618 retracement that is out there. That is just simply of the last leg down. But the more, when you take a look at a butterfly, the real retracement that you should be looking at here, which means there could be some additional move to the upside, the markets, then there could be some additional upside in the euro. What you would be doing is you would be taking a look at your A to D point. So what that leaves us with is if you go to the A point on this butterfly pattern, you're looking at the euro at the high of June 20th, 2012, that high out there, 1.27421. And you would go all the way down to the bottom, folks, from July 24th, when it made a low of 1.20411, when Super Mario was going to save the euro out there. So what you can see is there's a range here. That 1.24431 and 1.24743 area is really your range there of where that 0.618 is. So, you know, right now you've got the euro traded up towards the top of its day. That's what's pushing the markets higher here. So the euro is something that you've got to be paying attention to. Why? Because if the euro moves higher, those cracks that were in the market yesterday, those cracks just might be only just surface cracks, and not cracks that are going to simply bust through the ice. But let's go take a look at the cracks in the marketplace yesterday, because they are all over the place. And we take a look at all over the place. Let's just simply start with the indexes out here. Let's start with the composite. The composite yesterday closing out at 29.89, getting up to a high of 3,000.24. That 3,000.24 going against the downdraft day of May 4th. That high out there was 3,001.48. So you had a failure out there. 3,001.48. Did it get all the way up over that? 3,000.24. It did not get all the way over that. But what you also did is you made a 0.786 Gartley sell pattern. So if this area here fails, now it would not be unreasonable to go close the gap. That gap would be the low of May 3rd. That candle, 3,016.20. In fact, you close the gap, then the work to the upside, in essence, is done out there when you take a look at the composite. And then what you'd want to see today, is a close. You'd like to see it get back inside the range of yesterday, certainly inside the high of 3,000.24. If we go take a look at the Dow, let's go take a look at what was the strength in the marketplace. The strength here in the Dow closing out yesterday at 13,117.51. What was the Dow doing? The Dow going into that May 1st swing point. That swing point low, 13,174.65. The Dow gets up into it, closes below the Friday push higher, closes below the July 30th swing point. You had a failure there on price and volume. Those folks are ideal failures. Now, you still have that A to B equals CD pattern that could unfold here with the Dow moving up to 13,313. You have to prepare for all possibilities. The candle that was out there from yesterday, that, folks, is a shooting star. That is the inverted hammer. And that means what? That's Steve's candle. That is my candle. I want that to be your candle. I want you to be looking for those candles. When you see those candles at highs, when you see those candles at failures of swing point, they have a lot of meaning. That means that you should have very strong resistance at the 13,187.28. Does that mean that the market can't try to push up over it? No, it certainly can. In fact, in hammer candles, the best entry points are when it tries to push down below it. That means on a shooting star, your best entry points are when it tries to push up over it. But what you want to do is you want to anticipate everything, and what you then want to see is you wouldn't want to enter a short position if it pushes up over it until it gets back below that 13,187.28 area. Otherwise, it was just a little crack in just an area of the pond that didn't work out. But folks, cracks everywhere. Let's go take a look at the New York Stock Exchange. Very important out there. Why? Because it's the larger breadth of the marketplace. If you take a look at the New York Stock Exchange, what did it do yesterday? Sets up a 0.786 Gartley. Is that the first Gartley on the chart, folks? Absolutely not. Why don't we draw the actual first Gartley pattern that we had on the New York Stock Exchange? That was off of the highs from March 19th when the New York Stock Exchange was up at 83.2767. Let's come down to the low that was put in here, that low on April 10th. Folks, here is the first 0.786 Gartley. See that 1.618? Beautiful, sacred geometry. How about this? A 1.272 expansion yesterday. And look at that candle. Another one of Steve Osan's shooting stars out there. And you are stars, folks. 877-927-6648. Give us a call, folks. I'd love to hear from you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back, 877-927-6648. Let's go take a look at the most current shooting star that we've got in the marketplace. Let's just go over and take a look at the ES Mini. That's the S&P futures contract, and we're taking a look at the 30-minute chart. Let's take a look at expansions first of swing points. Those expansions, folks, that we'd be looking at would be the expansion high off of the swing point from 10:30 in the morning on July 30th. That swing point high, 1387.50. The swing point low, that's a swing point that came in at about 1 p.m. That was on August the 2nd when the ES Mini was trading down at 1349.25. You take that math, take the difference between those two, multiply times 1.272, add it to the low, that low of 1349.25. That'll take you right up to 1397.75. Well, let's go take a look. Let's go zoom in on the chart here, and let's go see that last shooting star. That last shooting star happening as we were coming on the air at 9 o'clock. And if you take a look at what did price get to on the ES Mini, oh, I don't know, how does this work, folks? 1397.75. That's a beautiful thing. So you make a 1.272 expansion. You've got a reversal candle that's out there. Now what are you looking for? You're looking for confirmation. That confirmation that the move to the upside may, in fact, be over here would be a close below 1390. 1395.75. We trade at 1395. Now that was the open. You want to see really a close below 1395 and a quarter, and we'll see that here. We'll see whether we get that in the next 4 minutes. If not, what's that say? That says that the top of that shooting star should be tested intraday. Lots of moves going on in the markets, in the pre-market. So many earnings releases after the bell yesterday, before the bell this morning. Let's go take a look at some of those that are really popping out there. How about that? Let's take a look at the FOSL, Fossil Inc. They closed out at 69.79. They're trading out right now at 84.11. If we take a look at net sales, 1.23 billion versus 1.09 billion net income. Let's see here, 115 million versus 107 million. They must also have some pretty good guidance out there because they're trading up 20% this morning. Right behind them, Toomey Holdings. I got Toomey luggage. I think they make a great product out there. TUMI is the ticker symbol. I believe an IPO not too long ago. Toomey closed out at 18.51. They're trading out right now at 21.79. They had sales 95.8 million versus 78.6. Income of 6.4 versus 2.3. That's a beautiful looking thing. That is on Toomey. They're trading up 17%. You've got, let's see here, the next one up that's got some any kind of trades here. Grand Canyon Ed, LOPE is the ticker symbol. They closed at 16.15. They're trading at $19 right now. China Newborn, BORN, they closed at 202. They're trading out at about 237. Travel Centers, TA, Travel Centers of America. TA is the ticker symbol, closing at they traded at 583. They closed out at 518. Let's take a look at some of the other big names out there. Chesapeake Energy, this is not something to get in front of, folks. 1770 is what they closed at. 1890 is what they're trading at. They're going right into a sign of weakness. If we take a look at MGM Resorts International, MGM is the ticker symbol. They closed at 938. They're trading at 975. They had revenue of 2.5 billion versus 1.97. Their earnings per share of 30 cents versus 6.22. Oh, they got a loss per share of 30 cents versus 6.22 a year ago. Market is digging that. Interesting. Oasis Pete, AOAS, they're trading up about 6% here. Closed at 28. What was it? 26.68, trading out at 28.25. Let's see, what other big names? Pandora Media. P is the ticker symbol there. They close at 9.79. They're trading out at $10. Plantronics, PLT. They close at 33.47. They're trading up at 34.30 right now. CVS Caremark, CVS the ticker symbol. They close at 44.90. They're trading at 45.85. That is all to the upside. Let's see, who's the big laggard on the downside? You got WMS Industries. They're down 24%. You've got NII Holdings, NIHD. They're off 16% this morning. Leap Wireless, they're off 15%. Power Integration, POWI, they're off 11%. Sun Hydraulics, Cross Country Health, CCRN, they're down 10% this morning. JDA Software, they're down 10% in the pre-market. Caesars Entertainment, CZR, 847 is what they closed at. They're trading out now at 781. 877-927-6648. Got the Dow futures up about 33. That shooting star, folks, just kind of hanging right in there. Got 1 minute to go. We'll see where that closes. We'll see where these markets pop when we get right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. You got the Dow up 54 points. S&P's up 6. Composite up 15. Small caps up 4. Microsoft up 9 cents. Intel up 17. Google down 94 cents. Cisco up 19 ticks. Apple up $1.91. Let's see here. Leading things to the upside. Looks like we've got Apple. Broadsoft. BSFT up $9. That's up 33% out here. Now, what I do have up on Tiger TV, we've got that ES mini chart. We've got the 30-minute. We saw the shooting star. You got a close here coming into 9:30. That was not below what we were looking for. What did that say? That said that the highs were going to be tested. That's what you have going on here right now. 1397.75 is where the ES mini is headed to, and then we'll see where that closes as we we come into the 10 o'clock time frame. If we go take a look at what's going on inside the ETF indices out here, let's go take a look at the Qs. The Qs yesterday making a 1-to-1 A to B equals CD. The Qs also coming into that downdraft from May 3rd. The volume yesterday was incredibly light. Take a look at the Qs. Coming to that May 3rd area, 51 million shares. That would be the easiest for it to have tested. It came in there yesterday with 23 million shares. That is less than half, and that was the easier of the two areas volume-wise for the Qs to take off. Remember, folks, there are cracks on the ice out there. You must be careful as you go forward because you could just crack and go right on through. If you take a look at what the Qs were really going against, they were going against that downdraft from May 4th that had 107 million shares out there. The 0.786 Gartley on the Qs is $66.73. Let's just go draw that pattern in here right now just so we can see what that looks like, as well as expansions of swing points. So 66.73, you get up there, and that's very close to 1.618 A to B equals CD. So you're going to keep your eye on the Qs out there. Let's go take a look at what's going on with the other ETFs. Let's go take a look at the diamonds. Why the diamonds? Because the Dow has been the lead dog in the hunt on the way up. The diamonds into the May 1st swing point. Yesterday, what did they do? They rejected that May 1st area. If you take a look at the May 1st low, that low is 131.40, 5.4 million shares. What did the diamonds do yesterday? The diamonds got up to a high of 131.61, 4.5 million shares, closed lower. What kind of candle? Shooting star candle out there, folks. Shooting star, the high of yesterday is going to be tested. That high is 131.61. So far, the diamonds have gotten up to 131.55. So watch the volume today. What was the volume? I said the volume yesterday, off maybe about 16% or so, still lighter volume. So you had a crack. There's another one of your cracks out there. Let's go take a look at the SPYs out here. If you take a look at the SPYs, what did the SPYs do yesterday? Shooting star candle. How did they do it? Well, they got up into, they get all the way to May 1st. I don't know if they made it to May 1st. Maybe they saved that for today. If you take a look at May 1st, the low out there, a 140.36. You're trading at 140.32 right now. It has gotten up to a high of 140.40. You did not get all the way up there yesterday. That set up that at least wanted to go tag that area. You now have that tag today. If you get a close today below the high of yesterday's shooting star, that's 140.7. There is another crack in the ice out there. Yesterday, volume, amazing. As it was coming into the May 1st swing point on the SPYs, that SPY volume had 151 million shares. What did it do today, or what did it do yesterday? 85 million coming in to 151 million shares, folks. No way is that going to hold. And so you'll want to come back. You'll want to take a look at, so the setup for today, as you come in the 4 o'clock session here, if you get it closed and you close up inside there, even if it's on light volume, what's that set up, folks? That sets up that it wants to go to the high of that May 1st swing point. Now that you're up in there, you do it on lighter volume, you get it closed below yesterday's hammer candle, not hammer candle, that was the shooting star, that was the 140.17 level. Also, you get it closed below the 140.36. Well, you're going to have to if you're going to get below 140.17, and you do it on lighter volume, meaning less than 151 million shares. Of course, ideally today, what you would do is you would do it on less than 85 million shares on the SPYs. That would say the crack isn't a small crack. The crack just got larger. Be careful if you're going out further on the ice out there. Let's go take a look at the small caps. Let's go take a look at the Russell 2000. The IWM yesterday, another sign of weakness. Now, the IWM yesterday, what it didn't do was the IWM yesterday was not able to get into the July 19th swing point. That July 19th swing point had 49 million shares. Yesterday, it did 34 million shares as it was coming into it. Today, you're seeing another crack in the ice. You've got the IWM got into that area. again, that area being July 19th. So you're going to want to see today, if you're bullish, you want to see it close inside July 19th. That low, 79.81. You'd prefer to see it close of more than 49 million, with more than 49 million shares. If you're bearish, you want to see it close below 79.81 on less than 49 million shares. And again, yesterday, what you had was 34 million shares. What are the small caps actually running into? Oh, they're running into a major supply line here, folks. And right now, the Russell is not even able to get up into it. That supply line is April 10th. That supply line has 101 million shares. 80.16 is that price point that you're looking at. That is, so I think that rounds out the ETFs out there. As you can see, lots of cracks in the ice out there. So be careful if you're ice fishing. Be careful if you're continuing to go out into the center of the ice. I would consider that being long the market. All you need to do is just move your stops. Make your stops tighter, folks, if you are long and strong. Why? Because if this is a rally, then your stop shouldn't come into play. What's an easy way to do it? I would just simply take a look at yesterday's high, and I would take be outside of yesterday's high, and whatever it is that you're in at some area of some Fibonacci expansion of the average true range. And you say, well, Steve, what's the average true range? You know, that's a good question. Let's go see what is the average true range on the IWM. All you have to do, folks, is go take a look at what I recommend, which would be the last 10 candles out there. I have a position size calculator. If you have not used it, you need to use it. And just go to the homepage at tfnn.com. Over on the left-hand side, you'll see an area. It's a little slider up and down. You can use this for 30 days for free. There's a set of instructions in there. And this automatically helps you to identify what your position size on anything it is that you trade. I've got that on TigerTV right now. And that, folks, is numero importante. That is the number one important thing that you need to be able to do, is make sure that you are trading with the right position size. In the case of the Russell 2000 here, the IWM, the average true range is $1.39. That means your stop should be, if you're long and strong, should be at least $1.39 below yesterday's close. That would be an easy place to put it. I would make it more than $1.39. I'd multiply that $1.39 times 1.272 or 1.618. And the position size, the average true range, it's all calculated down at the bottom. So go test out that tool if you haven't. And if you don't use this tool, folks, then make sure that you go back and you take a look at the average true range of the last 10 days. That is a pretty decent number. Got a question here in the den about how about bonds? James, bonds folks are looking at. So let's go take a look at the bonds, see what the bonds are doing. The bonds right now, so this will be kind of interesting, because the bonds right now are trading below the 50-day exponential moving average. That, folks, has acted as a resistance area. Of course, we come over, we take a look at volume. You got bonds really breaking out right here on the candle of May 23rd. So for bonds to actually get down to the top of that, that would be 147.31, and then ping off of that, that would be absolutely natural out there. The bonds are coming down. Take a look at the volume yesterday, pretty anemic as well, moving down with 300, well, actually just moving sideways, 347,000 contracts. That was going against the downdraft of 348,000, but what it was really doing, it was taking a look at the area here with 474,000 contracts from May the 30th. So real support here, I would say, on James Bond is going to be the low of that May 30th candle. That's out at 146.29. You're trading out at 148.24 right now. But you'll want to come back and take a look at the close on bonds, because this 50-day has held as a resistance area here. In fact, it's only been tested during the last 7-8 trading sessions since July 27th, when he had bonds move down to a low of 149.08. Another question here about Apple. So let's go take a look at Apple. AAPL is the ticker symbol. I mean, already, here we go. So we've got Apple out here. Apple has made a 0.786 Gartley. That area here still is in play, still has held. That swing point is July 10th that you're taking a look at. That July 10th swing point has 18.2 million shares. You closed up above it yesterday, and you did it on 10 million shares. Not a lot of conviction behind the move in Apple. And so, if you are long Apple, you want to see some energy come in on this thing. Otherwise, you've got a 0.786 Gartley pattern still in play here. And what we know on Apple is you've got volume that has not been tested down at July 25th. That volume has 31 million shares. That price point is 570 to 580 out there. Apple also, also coming into this area here of where you had a nice downdraft, where it had a nice downdraft. Maybe you didn't, but it did on April the 13th. That downdraft, 30 million shares. The high there is 624.70. So far today, you've gotten up to 625. So you've tagged that. Did you do that yesterday? You got up to 624.87. 10 million shares yesterday, going against that supply line of 31 million shares. So that's on Apple. I would say, again, what you want to do if you are long Apple, just simply adjust your stop. Make sure it is below the average true range of yesterday's close. Yesterday's close was 622.55. We go take a look at what the average true range on Apple is, AAPL, and we hit the enter button there. That's going to tell you that on an average day, Apple moves $13 up and down. So just make sure that you've got a close $13 below yesterday's close. I would make it some multiplication factor of that, and then you should be safe. If Apple trades below that, that's telling you that Apple is giving up the ghost out there. Let's go take a look at some of these other stocks here that are moving. Let's go take a look at Broadsoft. BSFT is the ticker symbol. Let's go see what she or he is going against. BSFT. There we go. Broadsoft. Broadsoft gapping up 36.98 is what it is trading at. It's got some nice volume in it. Of course, this thing is coming right up against. This thing is going back and is going back to the downdraft. Now, the downdraft on this, 4.2 million shares. The high of that downdraft is going to be the start of the May 4th candle. That the high. The candle itself goes from $40.65 all the way up to a high of $44 even Steven. So again, the low there, 40.65. That had a total of 728,000 shares. Of course, it's really dealing with the supply line of 4.2 million shares. However, in this morning's trading, it's already done 2 million shares. So this thing is going to certainly close the gap. Of course, it's going to leave another wider gap out here. That is on Broadsoft. So that is being pushed up towards the highs. Let's go take a look at Broadsoft. Let's put this on a weekly basis, see what else Broadsoft here is doing. Let me just refresh my chart, make sure we got the right volumes here. So Broadsoft, you can see the volume now that it's going against on that downdraft from the week of May 11th is 9.3 million shares. So that's where I would really benchmark it if you are taking Broadsoft. Has got, it's got some real signs of some institutional selling out there. So I would be careful on Broadsoft. Let's go take a look at, let's go see what's going on inside the Dow here. So if we take a look at what's going on inside the Dow, popping to the upside, you've got J.P. Morgan. They're up 90 cents. So let's go take a look, see what's going on in some of the financials out here. JPM is the ticker symbol. Let's go see what J.P. Morgan is doing. Trading out at 37.20. Let's go see if that is, so that is going to try to continue this. All this is doing, J.P. Morgan is continuing to work off the supply line from May 11th. When I say supply line, we're talking about a gap down, institutional selling extraordinaire coming down with 217 million shares. Yesterday, as it was moving up, 18 million shares. When it was moving up on July 27th, 63 million shares. So far today, it's done 4 million shares. Good volume today for sure. All it's doing is going against the supply line. These folks are looking forward to getting their money back. Why? Because they bought it in the $36 range, and when they got down to $30, they weren't feeling real good. So not a lot of juice or energy inside here. I believe J.P. Morgan may be about the third or fourth weighting inside the XLF out there. I believe number one in the XLF is Wells Fargo. So let's go see what Wells Fargo is doing. WFC is that ticker symbol. Wells Fargo trading down. So that is the lead dog inside the XLF out there, Wells Fargo. So Wells Fargo makes this little, looks like it's a shooting star candle here on August the 1st. That volume was 41 million. Let's go see. That 41 million was going against the swing points out here from April 2nd. That had 24 million. So it was pushing up with volume. You would expect to see that high perhaps be tested, 3480 out there. 877-927-6648. Got the Dow trading up about 59 points right now. S&P's up 7. We'll be right back, folks.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah.
terrific Tuesday. What does terrific Tuesday mean here at TFNN? That means that you've got Kate Stalter from 11 to 12, Victor Jones doing the options hour from 12 to 1, Daryl Martin from 1 to 2, David White 2 to 3, Ken Shreve from 3 to 4. Filling in for Tom today while he is on his way back from the West Coast. You've got Kate Stalter doing 4 to 5 and Ken Shreve 5 to 6, folks. The high is in. Another crack in the ice. Now, this one isn't a small crack, folks. This one is a huge crack out there. In fact, this becomes real easy. If you were out there and you were ironing your shorts, now is the time to put them on. Get dressed up, put them on, folks. Why? Because you've got a 3 drive to a bottom pattern on King Dollar. Look at this. If you're not watching on Tiger TV and you're listening on the radio, make sure you go watch the archive of this show because, you know, it's unfolding in front of our eyes here. We get to watch it. This becomes a very easy trade because you don't have to use a very large stop out here. If you take a look at King Dollar, what you are seeing is you are seeing 2 symmetrical drives, 2 1.272 expansions of swing points. That first expansion of the swing point that we're talking about is July 19th. That swing point low, 82.80. Goes from 82.80 all the way up to a swing point high on July 24th out at 84.25. If you took that difference and you multiplied it times 1.272, subtracted it from the 84.25, where would that take you to? That would take you to the low of July 27th. That was your first 1.272 expansion when you had King Dollar trade down to 82.40. At 82.40, that becomes the next mark. If you go from 82.40 up to the swing point high that it put in here on King Dollar, doing it on August the 2nd, makes a high of 83.61. If you took that difference, multiplied it times 1.272, and subtracted it from that high of 83.61, where would that take you to? That would take you to the low of today, 82.07. Another 1.272 expansion. So now what you have is you've got 2. That's what's called your 3 drive. There's your first drive, happens to be July 19th. Your second drive is July 27th, and your third drive, well, that was this morning. That was today, folks. Now, when you're doing a 3 drive to a bottom or a 3 drive to a top pattern, let me in on a little secret here. The ideal trade setup, folks, is when you are also doing some type of retracement or expansion of some other sacred geometry number. Well, you tell me. Yell out. What are our sacred geometry numbers? What are they? Point what? 0.382, 0.618, and 0.786, right? Now let's go take a look at, as you were doing a 3 drive to a bottom pattern, what were you doing? We were coming back all the way to the swing point on June 19th. That swing point low, 81.39. If you go from that low to the high that was established here on July 24th, folks, what you're going to find out is you are at a 0.786 retracement. How about that? So you got a 3 drive to the pattern coming together at a 0.786 retracement. Oh, but we've got more. Why? Because the cracks are getting a little wider each and every moment. You also have a 0.382 retracement coming off of the lows of when, folks? When? May Day. May 1st out there. May Day. Isn't that what you say? You know, if you are long and strong, folks, I'm telling you, be careful out there because the cracks are all over the place. Just use stops. Just simply let the market do its work. But what you've got right now, folks, is you've got a 3 drive to a bottom pattern coming in with just simply beautiful sacred geometry numbers out there, a 0.382 retracement, a 0.786 retracement. And the beauty here, folks, is this fails, which it can. You have to be flexible. If this fails, you are going to see much, much higher price. I would get out those shorts and I would start ironing them, and on long positions, I would just simply adjust my stops. Thanks so much for being here, folks. I'll be up next again on the Money Masters Show. If you're leaving us for the day, make sure you have a safe day, and I'll look forward to seeing you in the morning. Dow is up 64, S&P is up 8, and there are cracks all over the marketplace. We'll be right back.
Well, it's always better when we're